Welcome back. You're watching the small and mid cap show here on NDTV Profit. A couple of sectors in terms of how they've done in Q3. A large chunk of the companies in these sectors are within the mid and small cap. Pretty much all of the companies are in the mid and small cap. And we've picked out textiles and sugar, at least for the discussion today. We've called in Pratik Tholiya, who's the Senior VP at Systematix Group, to try and dissect some of the trends going into Q4 and what we can take from Q3, what should we expect from FY25 on both of these sectors. Welcome to NDTV Profit, Pratik.
Yeah, hi. Good morning. Thank you so much.
Right. Pratik, if you can speak to us about how textiles is doing, how it has done in this quarter, what has the drag been, especially in international? How should one look at it in Q3 in terms of the numbers?
Yeah, so for textiles, I think Q3, if you see on the volume front, we've seen significant pickup happening across, whether it is garmenting or whether it is even yarn or whether it is the home textile sector. So all of them have seen, pickup on a YOY basis. Even sequentially, there has been some improvement that we have noticed, especially on the yarn front. So things are now, coming back to normal as far as volumes are concerned. However, because cotton prices have softened on a YOY basis, so that impact we are witnessing on the realizations of the end product. So garment realizations have come down. Some of the textile realizations have come down. So that is kind of going to keep your overall top line growth under check. But having said that, because of soft raw material prices, the margins have expanded. So if you see for the 7-8 companies that we have analyzed in our report, so we've seen on an average, 100 to 150 to 200 basis points gross margin expansion across those 8 names. So clearly on the margin front, there is a revival that we are seeing. So profitability will be better going into Q4, if you ask me, and even therefore for FY25. Top line growth might be slightly softer. I won't say it would be muted, but it would be slightly lower because of the low realizations. Now that also should improve going forward as the demand picks up. So if you see capacity utilizations have now started to come towards the optimum level, so that will help entering into FY25. And once demand picks up, I think realization should also go up. So net I think FY25 should be better than FY24.
Understood. But how much will realizations go up by, and therefore where should margins lie in your view in this sector?
See, margins currently are much lower than what we have seen, say, in FY21-22. So we are, despite this 200 basis points average margin improvement, we are still much below those levels. So there is a good headroom for margin expansion. Of course, that will be largely driven now by the realization uptick. But I think it will take another 2 quarters for the realizations to come back to those levels. And till that time, it will be just volume-led growth that we'll see in the companies. So realizations can go up at least 15 to 20% if you're asking me, but it will take time, at least a year. Maybe by H2 of next year, we'll have that kind of realization.
Interesting. You've also suggested in your report that gross margins were impacted by global issues. You of course have some issues with regard to supply chain that are playing out at a global scale. Outside of that, you're also expected or were expected to see some softening with regard to rates globally. That seems to be going away now. So global demand also may get impacted. How is that going to impact the sector as a whole? Could you just explain some of those mechanics to us?
Yeah, so we are also keeping a close check on these things. So Red Sea issue and overall supply chain issues are there. But having said that, I think now those are also normalizing, and so the Red Sea issue and those issues are largely for Europe. Those who are exporting to Europe. Most of the companies that we are tracking have and as such, India as a whole, we are more exporting towards US rather than Europe because we don't still have those FTAs in place. So for that, and most of it is on FOB basis, so really the cost is not really impacting us to that extent. So I'm not exactly getting too bothered about those issues. Yes, there are some, these are transient phases for us, and those should normalize in the coming quarters. And since we are mostly on the US side, the issue is fairly not significant for most of these names that we are covering.
Sure. And on the FTAs, Pratik, how does the UK FTA change things for the Indian industry as a whole? What should it probably bring to fore in terms of competitiveness, in the global marketplace as a whole, and how does it change for the Indian names? What changes?
See, our contribution to the UK is minuscule at this point of time, and the market is much, much bigger. We are, as competitive as, say, a Bangladesh or Pakistan, but because of the duty restrictions that we have, as a result of which our competitiveness has been taken away. Now, once this comes in, I think the market opens up big time for us, because we are any which is a lot of our companies are dealing with those big brands and those big retailers which are present in the US and also in the UK, but we are unfortunately not able to sell them in the UK. So now once this happens, I think the whatever volumes we are doing today, at least we can do 3x of that. So the opportunity size is 3 times of where we are today. So our volumes, what we are doing can actually go up by 3x. So that's the kind of growth that can just open up for the Indian textile industry once the UK FTA gets signed.
Significant. How likely is that to happen?
Okay, so that the Ministry of Commerce can only say. We have been waiting for almost 2 years now. Right. Now there is a chatter that something could happen this month before the election code of conduct kicks in. But I think, it's anybody's guess here.
Understood. It's a tough one, but a big upside there possible. Now, I want to quickly try and understand your views. Which company, there's plenty of consolidation happening here. Which company is best placed to take advantage in your view? Very quickly before I move to sugar.
Companies, so we have coverage on Gokuldas, KPR, and Vardhman. We have a buy on all of these three. Best place, I think, from the garmenting side is clearly today KPR is looking very strong. They've also announced a new capex in brownfield capex in garmenting. They are one of the leaders in that space, and what we've seen is like I spoke about the realization being soft, that has impacted them in this quarter. But going forward, I think that has bottomed out and that should improve. So with higher volumes and better realizations, I think KPR and with strong connect with the global retailers and all, they are one of the best places to take advantage of this upside.
Understood. So that's Pratik's pick in the textile space. I'm going to quickly take it to sugar, Pratik, because I'm running out of time. Now, 3-4 factors playing out. One, sugarcane prices have been raised, which means margins have taken a knock, at least on that count. Some sugar prices have held up, which is definitely a positive, and which is probably what is aiding the numbers. How does ethanol come into play? What is happening on that front in Q3? Could you just talk us through some of those?
Yeah, so Q3, there was an arbitrary decision in the month of December. So just when the crushing had started sometime in mid of November, then suddenly, so companies had, aligned their capacities accordingly. But then this sudden decision came in.
Well, that was the management of Systematix speaking to us about how the Indian textile market and the sugar industry is panning out to be in the trajectory going forward. That's all. That's a wrap for the show for now. Thanks for watching. Stay tuned for more such news and updates on NDTV Profit.